got a super panel coming up. But first of all, I'd like to introduce Kevin here, Mofid from Savills, who's just going to give us a kind of brief overview, and then we'll pick those topics up in the market. So, Kevin, over to you.
Perfect. Richard, thank you so much for having me. Good afternoon, everyone. Richard has asked me to give 5 minutes just as an introduction. And what I want to do is present some recent research from Savills that looks at our pan-European logistics census. For those of you who don't know, every year Savills does a big survey of occupiers, and we get up to 700 responses, and we ask them a whole myriad of questions. But there are some really, really interesting results specifically related to ESG, sustainability and net zero, which I just want to flag today. So that's the self-promotion. So as I was preparing for this, I realized I'm not an ESG expert. I've spent 20 years talking and writing about warehouses, and obviously ESG is a big factor in that as we move forward. So into Copilot, I asked it to give me an image, generate an image of a ESG-friendly warehouse. And this is the image that Copilot created. And if we look at the description that Copilot then gave, when we're talking about an ESG-friendly warehouse for logistics, the scene includes solar panels on the roof, electric delivery vehicles parked outside, energy-efficient LEDs, workers collaborating in a clean, well-organized space, visible recycling stations. So that's all very interesting. That's what AI thinks that an ESG-friendly warehouse is. I then turned to Prologis. Prologis, the largest developer of warehouses in the world. Apologies to our developer friends and clients who are going to be on the panel in a moment. But I just thought I'd look and see what Prologis say about a net zero building. And here, this is from the Prologis ESG report 2024. And you can see on-site solar, LED lighting, electrification, battery storage, off-site power purchase agreements, a whole myriad of stuff that I know our panel are going to get into in a few slides' time. Now, this is going to be some more presentation from some recent survey work that Savills have been doing. Earlier this year, we surveyed the entire logistics community for Savills. So around 900 experts across the world solely dedicated to logistics real estate. And we asked them a question: how has tenant behavior changed in the last 12 months in your market? Now, if you're a leasing agent, you're going to be very concerned that occupiers are taking longer to make decisions. I think we all know that. But tucked away in the results, we asked a question about deprioritizing sustainability credentials. And it was broken out by Europe in the red, Asia Pacific in the blue, and America in the yellow. What I found very interesting was actually that it was the European experts within Savills who had a slight higher weighting to occupiers deprioritizing sustainability, because I don't think that's true. And again, I'm sure Richard will flesh that out in the panel. Okay, turning to our logistics census. We launched this at the start of September with our partner Brookfield Priorities. Question to 700 occupiers. What is the biggest challenge facing your logistics property operation at the moment? Now, I am about to present a series of slides that are almost contradictory. People are telling us one thing in one response and then telling us another when we get into the further detail. So, what are the biggest challenges facing your operations? Right at the top, cost pressures, rising rents. Right at the bottom, energy efficiency and buildings that can't accommodate ESG ambitions. In my mind, this is about the survey design. This question is about asking people what is concerning them about the here and now. What is concerning them about today? I've been at Savills for 11 years, and every single year we've done an occupier survey, whether it's European or UK. In the good times and the bad, whenever we ask this question, occupiers always say their biggest problem is cost, regardless of the economic cycle. So in some ways we can discount that. But if we go back to 2021, 2021, the first year of our European logistics census, what are you concerned about? Well, cast your mind back to 2021. COVID pandemic, vacancy rates of 2%. It was the lack of supply of new buildings was the number one concern, whereas implementing sustainable measures, only 8% of our respondents said that was a big concern for them. Fast forward to now. Question. What's on the horizon that could be game-changing for your logistics real estate? Remember, 700 occupiers contributed to this. Look at the number one result. More stringent ESG targets and regulations. So that suggests to me that the occupier community is now realizing that regardless of what they're doing, legislation is coming, certifications, all of that type of stuff. And so for 2 years in a row now, it has been the number one topic that occupiers say is game-changing for their real estate. How do you intend to evolve your supply chain model over the next 3 years? Well, this is super interesting as well. By far and away, the biggest response, reducing the use of CO2 intensive transport. So that is going to have a huge impact on warehouse design, warehouse location, availability of power, all of that sort of stuff. We then start to see things like building level automation, all of that type of stuff. Again, power hungry, power related. Another question from our census. Do you anticipate that your logistics real estate network will need to change to continue to meet your near-term business requirements? And again, when we shift our mindset away from the present and the bottom line and start thinking about the future, we see the same thing. Better ESG credentials or performance, more efficient or productive buildings. So again, you can see in just 5 years that we've been doing our census, the mindset of the respondents is changing over time. We then asked a question again, what warehouse features are important to you? Interestingly, for the first time ever, building height was the number one requirement. So buildings are getting taller, warehouse automation, robotics, but again, energy efficiency, scope to include automation, power resilience, energy availability, staff well-being. So you can see, again, how the occupier mindset has evolved over the 5 years of us doing our census. However, where does it sit for investors? So, cast your mind back 5 years. We asked our investor audience, what are the biggest factors impacting the investment market at the moment? Last year, it was the availability and price of debt. 5 years ago, ESG was at the top. This year, ESG is at the bottom. What does that mean? Does that mean investors are more concerned about other things? Or does it mean that the ESG net zero battle has been won? Another question that I'm sure Richard will be posing to our audience. To wrap up, I wanted to cast my mind back to 2018. Savills, in conjunction with Property Week, a UK magazine and conference organiser, sorry, Richard, they organised a competition called the Warehouse of the Future. And a load of architects joined in this discussion about what the warehouse of the future might look like. And, we've got entries here from RPS, UMC, Chetwoods. There's a whole article you can find on the internet that looks at this. If you type in Property Week Warehouse of the Future. But what struck me as really interesting was that all of these designs were really looking at the efficiency of the operation rather than the fabric of the building. So that, to me, was quite interesting in terms of how things are going. I'd love to revisit this one day. Maybe we'll get a chance. So, final thoughts for the panel, and Richard to chair. Has the net zero battle been won for new build? What about retrofit? Investors, are they more concerned about market conditions at the moment? What about the legacy stock? What about the older stock? And is the warehouse of the future about efficiencies inside? So that's me. A little bit of research, a little bit of survey work to set the scene. And I'm now going to hand over to people much more qualified than me to talk about what it means for the market. Thank you.
Let's start just with some quick introductions so that everybody knows who everybody is. Hugh, let's start at the end with you. Just brief introduction, and I mean 30 seconds, of you and the company.
I'm Hugh Macdonald-Brown. I'm head of logistics at Redevco. Redevco is a pan-European investment manager. 7 offices in 6 countries across Europe with about 11 billion of AUM. And I joined the business only a month ago by selling my business to them to diversify the portfolio into logistics. And that's 30 seconds.
Great. Hadley.
Hadley Dean, been living and working in Central Europe for 25 years and founded 5 years ago MDC Squared, and we are a niche ESG developer specializing in Poland and have been operating and now built last year about 200,000 square meters.
Great. Joost.
Joost Leendertse, founding partner of VerusSol. We are the originator of the rentalization model for how to invest in decarbonization and how to do it on the most optimal way.
Great. Ian.
Ian Worboys, CEO of European Green Logistics Space. We're a pan-European, both an asset manager and developer. And everything we try to do, we try to make greener.
Great, thank you. And thanks to everybody for joining us online as well. Let's pick up with, I mean, there were lots of issues there that Kevin brought up in his presentation. So maybe let's pick up with some of those just initially. So has anybody got a reflection on any of those points that Kevin made about whether or not sentiment has changed? Is the argument won? Have investors changed their view on it? What's your take on that? Let's start with you, Ian.
Yeah, and I think a couple of interesting things there was where ESG now sits in investors' reading of what's important. And I hope that Kevin's right, that actually it's now almost a taken that developers will build to the top level of sustainability, and therefore it doesn't have to be on their agenda because it's a given. And I think that where in valuation terms, if valuers start valuing things differently, again, it becomes a given rather than top of the list. I hope that's what it means, not that everyone's listening to someone across the waters and therefore dropping it because it's not important.
Yeah, that's interesting. And Hadley, from your point of view, I suppose, what does sustainability mean to you when you're looking at that? So when you're developing a building, looking at an asset, what does that mean for you? What are you looking at? What are the criteria? So,
the easy answer is when you're building a building, you build to a BREEAM outstanding. And that's frankly a box ticking exercise. And it is massively easy to manipulate. And it's frankly nonsense. So what we have learned is that if you actually want to make a difference and you want to build a green building or a building that is going to make a difference, you do need to follow that process. But if you really want to make a difference, you've actually got to focus on one thing, which is the amount of embedded carbon you're putting into the atmosphere as you build it. And it's that simple. There are many examples all over Europe where developers are getting their general contractors to self-assess the BREEAM ratings. So, I think people are wising up to that.
And interested to get anybody's views on that as well, but is that a missed opportunity in the sense of if developers are doing it as a box ticking exercise, therefore there's more that they can do potentially, because actually we're not pushing it further with either modern methods of construction or different types of steel or whatever it might be.
For sure. I mean, it's so I think one of the challenges is, and you guys, I think, Ian, you'd be, and Hugh would be really good to answer this. I mean, the challenges is historically, when you run a big development business, your long-term incentive plan is just, are you ticking the ESG boxes? And as long as you're ticking the ESG boxes, your incentive to go actually one level down to understand, actually, is this happening, is pretty limited. We asked one question on our 50,000 metre building we built in Woodge, which is can you procure green steel to the contractor? It was the first time the contractors had been asked that question. And this was 18 months ago. I mean, it's absurd. And we saved 50% of the CO2 emissions of that building by asking one question. And the problem is I think most senior people in companies don't have time to give a shit. And it's that simple. They're too busy talking to investors to actually get into the weeds.
Okay, good.
I think the other thing to add there is, until it becomes a valuation issue, I think, to your point, Hadley, if I'm a developer, and I'm not, but if I was, and I can get the same price because I am BREEAM outstanding, then, quite frankly, the incentive at the moment is probably to deliver that, because the oncoming investor is going, I am the box ticker. So until the box ticker who's going to buy your product is put under a bit more pressure and scrutiny, then quite frankly, it is probably the path of least resistance to just keep ticking boxes to create the value. What I think you're getting to is scrutiny is now coming into the world, and people are realizing that you can develop by reducing your carbon emissions by getting green steel. But we didn't necessarily know how or where to do that 18 months ago. So I think that's going to start creating a bit of a sort of spread between values. And then that's when I think people will have to do things about it. And I don't think we're maybe quite there yet.
Okay, that's going to push it a little bit. And so do we think it's more about, will it move to being more about value creation than it is about value protection? I mean, I think that's an interesting point. I mean, that may well have saved money as well. So,
if you see now the new Red Book, we were very busy last year creating the new 7 valuation drivers, and they're all in ESG. But the most important thing is, to get the valuation, you have to do the renewable energy in a building is a kind of a balancing act. If you pull too long or too hard to one string, something else will occur. So you have to do it right, behind the meter, building bound, give it to your tenant, etc., to get somewhere else your valuation. So yes, the valuation point is coming up, and when the first buildings, as you saw from Kevin's presentation, yes, for occupiers and even for landlords, is getting more and more a new, how do you call it, building bound component, like Wi-Fi was for offices, buildings so many years ago.
okay, good. Ian, yeah.
Yeah, no, I think one of the things that each company done, and I know that Hadley and the others have done it, is to make sure that you have a champion in your company. I'm not the highest knowledgeable person on being green, but he's standing behind you over there, Stefan Wolvius, and he is. And so his job is to educate myself, the board, and the contractors. And what we have to do as leaders is to empower him to get on and do that. But it does come back to exactly what you said about valuation. It's if you want to be greener, we buy older buildings and try and make them greener. We can only do that by actually getting a yield shift, that once we made it green, it's worth a bit more. So, and as Joost knows, one thing that Stefan taught all of us is if you want it to be green, it's got to make monetary sense. If the figures aren't green, the building won't be green.
And Hugh, in terms of that valuation side, what do you see? Do you see that changing? I mean, you mentioned that you can see a change happening. When do you think buildings will be valued based on looking forward rather than looking backwards in a way, which is to say, okay, this building now is going to be sustainable, so therefore it's going to have a tenant for the next 10, 15, 20 years?
Obviously, if I knew the answer to that, I'd be doing exactly that now if it was going to be tomorrow. I think, like all things, in Kev's presentation, what's important to an occupier, and I think height is the most important feature coming up that occupiers are making decisions on taking buildings. Yet if you go to a valuer and say, I've got a investment here, it's a 12-metre eave building built in 2015. I've also got an 18-metre eave building built by the same contractor in the same year. I don't think they necessarily apply a different valuation. They're maybe starting to understand the importance of cubic volume, but I still don't think it's coming through. So I think to the sustainability point, again, I don't think we're seeing, and Hadley might correct me if I'm wrong, but if the developer's going, but I've built this warehouse with green steel, I'm not sure CBRE valuation team is going, fantastic. I've just given you 50 bips yield premium valuation bump because you've done that. I think they'll look at it and go, what's the comp? There we go, and I'm back to my traditional methods. So I think that is the biggest challenge we all sit here by. And I think your question of, is it enhancement or protection of valuation? I think it's both. It's both. But I think until it becomes trickling into these CBRE values, we're still at that point where it's not making a difference. But the writing's on the wall, and it will do. So will Hadley's building get a better value for the green steel? Or if you haven't done it, will you just be discounted?
I mean, I guess the future protection element of it, if at some point the criteria becomes to be around embedded carbon as well as operational carbon, then suddenly you have a building that is going to be more attractive than others. So,
well, it's all about, it is becoming all about life cycle analysis. So if you can actually show your life cycle analysis, that's super important. But to Hugh's point, it's, you know, with the values, it's always a bit of a battle. But the bifurcation in the market, I do believe, is happening, but it's not happening in a positive uplift. It's more happening in a negative downlift to the older buildings that can't be, you know, you can't change the height of a building. You can make it more efficient, but that's where the bifurcation in the market's coming. It's not your values increasing in a future-proof building.
okay, good. And Joost, from your perspective, when you're looking at the rentalisation model, which now seems to be gaining more traction in terms of the view of how things will develop, what's your sense of that? And is that coming from both the investor side, or is it coming from the occupier side? Who's driving that?
Mostly both. The most important thing is that it's less heavy legally. You don't have PPAs, all those. And because you get the tenant will get the use of the PV system like an elevator for free and a small part of extra rent, it also makes optimize also what you said in valuation. Then it's not only a valuation of de-risking, but it's also giving a liquidity premium. And that makes a really difference in the valuation.
And just in terms of that point around, I guess, the embodied carbon versus operational carbon.
This is operational carbon, of course. Yeah.
That is definitely operational carbon. What are other areas where there can be efficiency improved? I mean, Ian, what are you seeing when you're looking at either acquiring something and changing it? What are the opportunities to do that?
Now, what we say, is everybody has, there's so many advisors or etc. etc. What we say, start first, you have your meter. And your meter is saying it's now 100. And this meter has to go down by 60 or 40. So first build a renewable energy system like solar, wind, batteries. Then you see after a year what the pattern of utilization is, and then you can really see what I have to do more to take out. But then you can do it on the consuming use, and that saves a lot of money than do it in the forehand.
Do we believe in, so solar is an obvious one in terms of large roof spaces, but are we also then looking at nearby wind farms or different other ways of being able to get off-site energy? Let's pick up with Hugh first and then.
We installed a 2.5 megawatt wind turbine with a tenant. This is 6 years ago, and that wind turbine plus the solar meant they were getting 85% of their energy needs through it. That was a complex structure because a lot of the time they need power purchase agreements for a significant period of time, which might not match the lease. So there's always complexities about, who's going to pay for this and can you link it to a lease? But I think, wind turbines definitely is something. Again, this was down in a place called Avonmouth, which is a very windy part of the UK. So some would argue that the further north you go in the UK, there's not much point in having much solar. So again, it also depends in where your geography lies and what's available. I don't know, Ian and Hadley, you've probably done different initiatives or.
No, I think one of the things is this. It's very interesting because I think this begs the question of having something like greener leases, where if there was something in the lease agreement that if a landlord invests and a tenant saves money, that say 50% of that saving gets added to the rent. So if you put a building management system in, the tenant saves, 150,000 a year. Their rent should go up 75,000 a year, and they've saved 75,000 a year. And in that way, the value of that additional rent will hopefully pay. So I think that if you had that agreement, and most tenants won't do it because they don't want to share information, but if they did, and something like a building management system where you were buying and storing electricity at night, not during the day, where you could put in a wind turbine and prove, and it's very easy to prove mathematically what has been saved, then I think all buildings would become greener. And one other point is that if you're in somewhere like Poland, and Hadley's more of an expert in Poland than even I am, is that gas is seen, if you say to a tenant, I'm going to replace your gas heating in your warehouse with electricity, they'll look at you and go, nope, because gas is seen as cheap, electricity is seen as expensive. So for us developers, we have to look at a different story where we are, and then trying to convince the tenants to the value of green, and that value then be reflected to the landlord, who will then invest more.
Okay. You're spot on. I mean, two other, let's say, examples is that. So we're exactly doing that now. Our next building is an 80,000 meter building we're doing with heat pumps, and it's really difficult because you've got to convince tenants. Gas is twice as cheap, but yet heat pumps are 4 times more efficient. So you're going to halve the heating consumption in the building, but you can't charge more rent. It's like, it's really frustrating. But you can demonstrate that they will have operational savings, but also you just come back to the locations of buildings. So we've just built a building for Impost, and it's in Krakow. So it's a bowl city, and one of the biggest problems of that city, just talking about ESG, is that it's the pollution just sits in the bottom of the valley. And, you've got a delivery company with vans going in the whole time. So we were able to get them a megawatt of power, some of it done by renewable, which then we were 100% battery. So these are the types of things that tenants want. And it's not quite solar power or it's not wind, but it still makes a difference to the environment where we're building buildings for the local environment.
And just picking up with you, Joost, because I know I stopped you from commenting on one thing a minute ago, so feel free to pick up on that. And ultimately then you're seeing, obviously, that the investor will pay for this, so they'll do the capex, and then they will be able to get that back through a rental increase, like Ian was mentioning.
It's a blended value. We always say it's Partly rent premium, partly de-risking, and partly liquidity. If you put them all together, then you will get.
And therefore you will get an increased valuation at the end of the day because the rent is higher, so therefore...
Yeah, don't concentrate only on one of those parts, but it is a blended value.
Okay, good. And I just wanted to pick up for a second on the social side, because that came up a bit in Kev's part as well, particularly well-being, employees, because that's a challenge for the logistics side. How do we see that? Is that something where the investment side is having to look more serious at that in terms of what amenities you're putting in when you're developing?
I think for us with sort of older buildings, one of the problems, you get two buildings next to each other, and even if you don't know Hadley's steel, the carbon from that, if you can show an occupier that having a building that will produce less sick days than sick days, so that's telling the FD and showing empirically, which exists,
Yep.
research shows, cleaner air will have less sick days. Again, then all of a sudden, you're able to say to the company, actually it's worth paying an extra 10 cents rent on this building than that building because you're going to have less sick days. Now most tenants look at you and go, really? But there's now the evidence to show that is the case. So if you can actually show that the well-being, part of the ESG, actually has a value, and again comes back to about being green, paying for green, then you can start arguing.
I think also, and I don't think we're seeing it firsthand yet. Again, it's a point of transformation. But ultimately, if you think about the warehouse worker, those who don't work in our space, everyone just thinks it's a pretty shitty job. It's pretty miserable. Well, that's what my parents who don't work in my space think. So I think it's, for us, developers, investors, asset managers, etc., you want to be targeting buildings. Look at Kev's slide of where the future of the logistics warehouse is going to. It looks like quite a cool place to work if that CGI is to be believed. But these are the things that actually now one of the biggest challenges in our world is labour. So Ian's correct. If you don't have the labour or the labour doesn't want to be there, you've got a massive problem.
Exactly.
In a labour-intensive operation. So for not a huge amount of money, to put in, I don't know, whether it's a gym or a breakout area and all these things that offices are now embracing and doing well from, doesn't take up much floor space in a 100,000 square metre warehouse, does it?
And it is really a change. Yeah. And also, what you said is if you see the list, what you can do for the S part is enormous, and especially what you're saying, the investment cost, you nearly cannot see it in the amount.
It's nothing. I mean, it's not a party political broadcast, but we do three things. One is offices. I mean, why is it that the industrial market are so hopeless at making nice offices? It's pathetic. I mean, you go around all the offices in Europe and they've been beautiful since the 1980s. Warehouse offices are disgusting. I mean, it doesn't cost a lot of money to have, take out the, just to have, it doesn't, it just requires a brain. It's anyway. So staff retention is the number one issue, to your point, that our clients face. Secondly, have a multi-sport court, have a paddle court. It sounds a bit ridiculous, but people use it. They like it. They enjoy it. They go out. They have competitions with their staff members. And thirdly, from a personal perspective, this is what we do. We always buy a local forest nearby that was going to be clear-felled or something like that, and then we link it once a year with an offsite. Because, again, people like it. They go and plant trees. There's something about it with a company offsite. There's a barbecue, that type of thing, and it's meaningful. And the management like it, the staff like it, and it costs you nothing.
And that's an interesting point about what you can do there that actually is not a huge significant cost, but actually does still make a big difference. And is also positive for the occupier, so therefore is a little more sticky, I guess, in terms of retaining the tenant. Just on the just on some of the challenges here, because there were lots of discussions about solar, the difficulty of solar, the difficulty of also all kinds of renewable energy, but at the same time you'd got demand for electricity, electrification in warehouses going up. So I agree with your point about gas, but ultimately if you're going to have electric trucks, you're going to have a huge amount of electricity that is needed, and that's got to somehow be delivered.
Yeah, and therefore we say, build first your cram path and the things you have to do by the meter. Wait a year, collect all your data, and then you can extend your utility with batteries, or you can put an extra string of solar on it, or a small windmill, or there are so many solutions to do so.
And how do we see the differences, I suppose, between what are existing assets that need additional work, and obviously new builds, you can build them as you want to a certain degree, assuming that the project is still profitable. But what are the different challenges there? What are the opportunities for it?
To me, the biggest challenge is making the value circle work. That's number one. Number two, the great things with the logistics buildings is you can buy a building built by a good developer back in the 80s, 90s, 2000s, and actually the structure is still sound. You might change some of the things within it or put solar panels on it, but the nice thing with logistic buildings is the structure is very solid. Height might be different, it might not be today's height, and Hugh's right. Tenants want higher and higher and higher, which if you go back to the 80s was sort of 8 meters, 2000s was getting 10 to 12, 12 to 15. But so the opportunities there, it's just having tenants who appreciate that you can pay a little bit more for them and having the will to do it, because the basic structure is there for you to work with.
Okay, good. Yeah, go ahead, yeah. I was just going to say, to keep us on time, I've got one last question, really, which is that if we were going to set ourselves a goal, then what would it be for 2026? And you will make your appointment, Hugh. Don't you worry. I'm ensuring that. So, what is your goal for 2026? And then next year at Expo, we can come back and find out whether you've achieved it. Who wants to start first?
I hope I will make it with the RCS that we can, how do you say, that the valuation is there, that it is not anymore for valuators, how do you call it, following the market, but they are going to set the market. That will be a huge change. Okay, all right, valuation, that would make a big difference, yep.
I've got quite a lot of goals, having just started at Redevco, but from a sort of sustainability point of view, I think it'd be great if we could launch into the logistics space. Redevco is all about transformative real estate, a force for good. So I'd like to be sitting here this time next year, whether that's supporting Ian and Hadley on one of their green development projects or similar. That would be very cool to show that we're off and running from a sustainable point of view in the logistics space.
We are ready.
Great.
I think for me, it's if I've managed to continue my education program of finance directors, I'll be very happy.
Excellent. All right, last word to you, Hadley.
Well, we're in the middle of an equity raise for 300 million with JP Morgan, so next time if we raise that, I'll be drinking champagne.
All congratulations then.
Yeah.
And Hadley's buying.
Yeah. However, I remember a conversation with you where you said one of the goals that you would like to do, but maybe was actually being net zero for the whole portfolio at some point. Is that
so? Yeah, I mean that's my big, my big hairy audacious goal.
Not the 2026 one, but
no, but I mean that would be amazing. It would be if we could be the first developer in Poland, because obviously it's been done elsewhere, to actually be the first developer to build a building in not just in use but through its entire life cycle net zero. That actually is our big hairy audacious goal.
Great.
And we heard it here.
There we go. Yeah, very good. Great. Thanks very much for sharing your insights on this. The next session that we've got is going to be on Germany. So if you're interested in particularly the Germany outlook, there will be a logistics sector specialist on that as well. And in the meantime, thanks very much to everybody for joining us. Thank you to everybody for joining us online. And if you could join me in thanking the speakers, that would be great.